Hi folks, David Waring here with InformedTrades.com. Today we're going to talk a little bit about two different ways that traders look at the market, and this is sort of a basic lesson for people who are brand new to things. If you're more experienced, you can probably skip over this one. The two ways that traders tend to look at the market is referred to as fundamental analysis and technical analysis. Okay? Fundamental analysis is basically looking at all the data that's available outside of price action for a particular financial instrument and then trying to determine whether that financial instrument is over or undervalued or correctly valued based on the analysis run on that data. So a trader or an investor that focuses on fundamental analysis will look at things like the balance sheet of a particular company is a great example. Interest rates for currencies is a great example of a fundamental factor that drives prices there. And they'll look at these things and they'll try and anticipate where price is going to move or where things are under or overvalued based on these fundamental factors. Technical traders, on the other hand, are those that use technical analysis, throw all that stuff to the side and tend to focus purely on price action, okay, or more specifically focus purely on historical price action and looking at and running analysis on historical price action to try and determine what is going to happen with future price action. So the tool of a technical trader is a chart and looking at prices of particular financial instruments and trying to determine whether they're under or overvalued or which direction they're going to move next based on that historical price action. As a general rule, fundamental people or traders, investors tend to be more long-term in nature. A great example is Warren Buffett, as somebody who leans more towards the fundamental side. Technical traders, as a general rule, there are exceptions to both, tend to be more short-term in nature in terms of the lengths of time of their trades. So as Informed Trades is a site that focuses on the active trader, we tend to lean a little more towards the technical side of things, and our client base tends to have, or our reader base tends to be a little more technically oriented, so that's where the focus of the next lessons is going to be. So this is kind of meant to give you an overview, just a quick overview of the two different types of analysis. In the next lesson we're going to look at something called Dow theory, which kind of forms the basis of technical analysis and the foundation of technical analysis, as well as some of the history that goes into that, so we can start to build and knowledge and understanding of technicals, and then eventually build into placing trades using technical analysis. So thanks a lot for watching, and I hope to see you in the next lesson, and have a great day.